most Broadway shows are not profitable. Hamilton has blown away any sort of return I think I'll ever get on any real estate investment for the rest of my life, because it just happened to be that one in a bazillion kind of hit. You have shows like that on Broadway, Wicked, Phantom of the Opera. There are sometimes these hits, but there's also a lot of flops.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 274. One of the greatest pleasures I've had over the past 8 months while staying home to avoid coronavirus is watching Hamilton over and over on Disney Plus with my 10-year-old daughter. But until I met today's guest, I didn't realize that Hamilton and other Broadway plays can be syndicated just like apartments and other real estate investments. So I've really been looking forward to talking with Matt Picheny today. Matt is the managing partner at MJP Property Group. He's invested in over 6,000 apartment units, and he's primarily focused on acquiring and repositioning multifamily communities. Matt is also a marketing veteran whose 20-year New York City career spans several of the world's largest advertising agencies. Matt and his wife are also Tony-nominated producers whose theatrical investments have included Hamilton and an international tour of Wicked. They are currently co-producers of the Broadway shows Moulin Rouge and American Utopia. Matt, welcome to the show.
Oh, Brian, it's a pleasure to be here. I've been on a couple podcasts before, but a lot of times I don't know the host, and you and I have gotten to know each other over the past year a bit. And so it's a real pleasure to be here speaking with you today.
I've been looking forward to this conversation for many reasons. You and I are both members of Rod Khleif's boardroom mastermind group, multifamily boardroom. So we have gotten to know each other, and that's why I was just really excited about the fact that you've syndicated Broadway shows and apartments. So we're going to talk about both of those things today. But first, why don't we just start with you telling us a little bit about yourself and how you got started investing in real estate?
Sure. I grew up in Florida, in the Orlando, Florida area, and I moved to New York to pursue a career in theater. I went to a musical theater conservatory and graduated from there and was a professional actor for 5 years. I performed in 15 professional productions throughout the United States during that time. And then I started tinkering around with computers and ended up getting more and more involved in that area and got into digital marketing. I spent 18 years sort of climbing the corporate ladder in New York City at many different advertising agencies. And during the last 10 years of that time, I started investing in real estate. It really came from a few years before that when I bought a primary residence and ended up selling it a couple of years later and quadrupling my investment, my initial equity. And then there was a huge light bulb that went off in my head. And so then then a few years later, I did my first investment that wasn't a primary residence. And I did that for 10 years, had a lot of fun doing it, was kind of burned out of the agency life. And my wife had gotten a really cool job opportunity in Miami. So when we moved to Miami, and it was completely out of the blue. We weren't planning on it. I was fine doing my agency thing. She got approached with this opportunity. It was too good for us to pass up. We moved to Miami. And when we got to Miami, I was like, I don't want to work in another agency. And I really like real estate. And I've been doing it passively and was doing okay with it on a much smaller scale. We had bought a townhome in Brooklyn that we had lived in, and we were renting that out, and that was cash flowing nicely. We were getting some nice cash flow coming in from some Broadway investments, most notably the Hamilton investment at that point. And I just said, you know what, I want to try to make this real estate thing full time. I want to take this full time. And so I did. And that's when I got involved in syndication in the large scale multifamily world. We were in Miami for almost 2 years. And then my wife, again, got recruited out of the blue for a really cool job opportunity in Boston, Massachusetts. And so when we weren't really loving Miami, Miami's fine, but we didn't love it. And so we moved to Boston. We love it here. We live in Boston, Massachusetts, been here for about 3.5 years, a little over. And, one of the things about doing the real estate that I did that I started doing in Miami was I knew that we probably wouldn't be in Miami forever and that we may move around a little bit with my wife based off of her job. She works in the theater. She's on the business side of theater. And based on that, I wanted to find a job that would allow me to maybe live in different locations. And so by doing real estate, I didn't own anything in Miami. I don't own anything in Boston. All the properties that I own are in different places in different locations throughout the United States. And so that's kind of in a nutshell how I got involved in investing in real estate.
Okay, well, awesome. And we'll go back and I'll probably ask you a very similar question about how you got started investing in Broadway productions as well. But let's stick with the real estate for now.
Okay.
Tell me or tell our listeners like what you're focused on. Is it apartments, multifamily? What size, what type, and where are you investing?
My portfolio, I have a portfolio of 6,000 units, but 75% of that are deals that I'm a limited partner, a passive investor in. And so one of the things about being a passive investor is that I like to invest in diverse locations with different operators, right? So, I have properties. I even invested in a deal up in New Hampshire. We ended up just selling that recently. It did really well, really quickly. But, I have stuff in Florida, in Georgia, in Texas, in Arizona, in Ohio, in Arizona, in Kansas, in Missouri, like just really kind of like all over the place, really good markets and sub-markets in these different locations. And then from a active perspective, I have a couple of properties that I own, my wife and I own outright. But then we have a number of deals. I have a number of deals that I've syndicated as a general partner sponsor on those deals. Those are located primarily in the Kansas City area, greater Kansas City area, and also in Texas, in both Dallas and Houston. There are some other markets that I'm also looking for deals in, but that's where I currently have a presence.
And then what is your day-to-day with your investments? Are you taking meetings all the time, or do you have any hands-on control of the properties, or are you working with the property management company? What exactly do you do to stay on top of all these units?
For me, the asset management of the properties is very important to me. It's also where my skill set really lies. For 18 years in the corporate America, if you will, I was a project manager at all those different advertising agencies. So I was in charge of making sure things got done on budget, on time, at the highest quality possible. And so as I climbed my way through that sort of corporate ladder as a project manager, I started then getting promotion and being like, a director level and then a vice president level. And so at that point, I would oversee other project managers, and those project managers would be managing projects. And I see the same role that I have now as an asset manager, where I oversee third-party property management companies. They're dealing with the day-to-day with the tenants and the maintenance and all of that, but I oversee that. And what that means from an oversight perspective, at a minimum, is a weekly standing phone call that we have, and a spreadsheet, a tool that I used to use when I was in the project management business in New York, that I have been changed, and it's morphed over time, even morphed over time from when I started it back then. But now for real estate, with real estate KPIs and things of that nature, that the property management company will fill out on a weekly basis, and we will review it on the call. And by going through that sheet, we basically touch all the different items that we need to. We address things. And then on a day-to-day basis, there's emails, there's phone calls, there's different things going on. But at a minimum, we speak at least once a week. For me, it's very important that I have that sort of very close-knit communication with the property manager and know what's going on with the property to make sure it's operating in an efficient manner.
Could you describe to us what the KPIs are that you look at? And by KPIs, key performance index, that's what we're talking about. So every week you're looking at these metrics that you're going over with the property management company. It's interesting that you took those metrics from your marketing career, in the corporate world, and now you're applying them to the apartment. So I'd love to know what they include.
The KPIs or key performance indicators aren't they're not the same things but the spreadsheet itself and the format of the spreadsheet and certain things in the spreadsheet are the same. So for instance, the spreadsheet is multi-tabs. So one of the tabs, there's a status. It's a thing I call stoplight status that has drop downs where you can indicate green means everything's fine, yellow means there's a problem, red means there's a huge issue, right? So we have that. And then blue actually means that the task has been completed. For the KPI, we also have the KPIs. I'll get into that in a second. Then I also have like lease trade outs. I have renewals on there. We have leasing. So we track all leads from leasing, how they're doing, whether they convert or not, what source they came from. So we know Craigslist is doing really well, or apartments.com is doing really well, or, so that we can make sure that we're maximizing our marketing efforts in the right places. And then the KPIs that I have on the sheet are things like the move-ins that month, the move-outs that month, the renewals, how are collections, what's delinquent, what's our occupancy currently, what's our pre-leases, what's our 60-day trend. So where are we going to be 60 days from now in terms of occupancy? How many units are vacant? What percentage of the vacant units are actually ready? Trying to think. I think there's probably a few more that I'm not thinking of right now off the top of my. How many work orders we have? All these different types of things that are things that we need to keep an eye out on.
And what are some of the stoplights? Like I'd imagine if you have a red light, that means, hey, look at this a little closer because you've got a problem.
Right. So it just depends on what the issue that what the status, like what the status item is. Like maybe the status item is tree trimming. The trees are too long. They need to be trimmed. And, so green would be great. We're doing, and it also there's more to it than just the stoplight. So it's like, when did it start? Who is it assigned to? Are there notes on it? But, it could be a red light right now because it's like, hey, it's the middle of winter, it's all snowy and icy and nobody's cutting trees. So now that's a red light because it's completely stopped. Or it could be a yellow light because we're still having a problem finding a vendor that would do that work. I'm making that up, obviously. It's pretty easy to find someone to trim trees, but those are the kinds of things. So it'll just depend on what the task is. The task may be to do new signs, or it might be to create an Instagram account, or, I don't know. It's just, we have all different types of status items that we put in there. One of the things we do value add on all our properties. So we'll put all the discrete tasks of our value add that we're doing, like parking lots need to get redone and we need to patch the roofs and we need to, whatever those different things are, will all be in there. We also have a status of them where they're white, where it's just blank and it's like work has not begun is that status for that one, because there's certain things that you just can't do everything all at once. So it's just a way for us to keep track of everything and keep our conversations guided.
Now, you said that this is a spreadsheet that you repurposed from the corporate world. Is this an Excel spreadsheet, Google Docs, and how do you populate it? Describe the logistics of the spreadsheet.
Sure. It's an Excel spreadsheet. You could put it into Google Docs. I just have always used it locally. I started using it before there was Google Docs. Google Docs might be a better way to handle it. But one of the things that I liked about it is every week we have a different one. I have a naming convention that I use. And so I'll have 3-4 years of these status docs. I then at the end of each year, I archive them into the folder for the year. So I can go back to any particular week on the property and tell you exactly what was going on at that time. I like having that historical information, that historical data on the property. But what I do is I've created it, and it's something that I give to my property management company and tell them, hey, I need you to fill this out on a weekly basis and send it to me the end of day prior to the day that we have our conversation. So if we have our conversation on Tuesday morning, I want it by the end of the day on Monday, whatever time that is, whatever time they're going to leave the office on Monday. I just want it in my inbox so I can review it either at night or in the morning first thing, just so that I'm kind of already aware. I've already had a chance to kind of review it and know what are the things that. Well, the great thing about the stoplight status is if it's green, you almost don't have to look at it. You might want to just eyeball it real quick, but the yellow and the red ones are the things to really get at, which is an important thing. If you don't have a status list such as this, you might spend 20 minutes saying, how's this going? They go, oh, that's great. Okay, how's this going? Oh, that's great. You don't need to talk about the stuff that's going great. I mean, it's nice, good, pat on the back. Like, yes, I'm happy about it and want to tell people that.
You want to see actual data and metrics to tell you, yes.
We need to focus on the issues, because something that's a red might warrant a 20-minute discussion. And my status calls are usually set up for an hour. I don't have 3 hours. I mean, I can make 3 hours if I need to, if there's an issue, but the idea is to get through this whole spreadsheet in an hour. So to have it ahead of time populated, I review it, I already know what the status is. So the call is just like asking questions about things on the status sheet.
Where are you now with the apartment investing? Are you raising money to buy more apartments and multifamily, or are you just managing or asset managing what you have and enjoying the cash flow from those assets?
Well, I'm enjoying the cash flow that we have. I continue to look for new acquisitions, and obviously raising money is a component of that. So I am always looking to grow my investor database with qualified investors, people that I like to talk with all my investors and get to know them a little bit. So I'm always doing that. That's an ongoing part of my job. And we're always looking at deals. I usually do about 1 or 2 deals per year. And that's not for lack of looking at them. The market is really hot right now. And that's usually I'll analyze 100 to 200 deals per year. But a lot of them just don't pencil out, right? So it's about finding those few that make sense, that I feel really good about. My underwriting is, I know everyone says this, but my underwriting is pretty conservative. So a lot of deals that other people will get into, I just will kind of not, I'll just pass over. Yeah.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com.
If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Kpis at RCB & Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Kpis at rcbassociatesllc.com.
I leave the risk for the Broadway stuff, which I know we'll get into in a little bit.
Yeah, well, let's go there. Let's talk about the Broadway stuff, because that's such a different area to be investing in. And I'd love to know just how that came about. At what point did you become an investor in Broadway productions?
I told you about my background and that I was an actor for 5 years in New York. And so I've always had a passion for that. And my wife is involved in the business side of Broadway. And she's been investing in Broadway from, well before I met her. So, during our courtship, if you will, we dated for a couple of years before we got married. We would talk about each other's businesses. At the time, I was in advertising, but she would tell me about the Broadway and how the business part of it was structured. And we ended up investing in a show together. We may or may not have been married the first time we invested in a show together, and we lost money. That's what happens with the Broadway shows. A lot of them are unsuccessful. The first show that my wife got involved with from an investment perspective was a play that she actually moved from off-Broadway to Broadway. It was an awesome play, and they lost everything, like 100% loss. She has since then always gotten involved in musicals, and which tend to be a little bit more profitable most of the time, sometimes, right? And on that show that we invested in, we lost like 25% of our investment. For that show, we looked at how we thought it would perform. And what we do, we approach every show is sort of, we have a three-pronged approach. We look at who's the creative team, who is the financial team, and what's the show itself. The creative team was phenomenal. I mean, they won many awards and had successful shows. The financial sort of team behind it, the general manager, the company manager, and the producer, that's sort of like the general manager and company manager are sort of like your property manager, if you will, in a real estate syndication, where the producer in a Broadway show is like the sponsor in a syndication. That whole team was really good, very well experienced. The show itself, like maybe the property in a real estate syndication, they were doing something really unique with it, and it didn't do well. And so we unfortunately lost money in it. But we've had other shows that have done really well. And so that's just kind of the risk profile that's involved in these shows. They can be very high risk, but very high reward. So we don't do these all the time. Between that show and then Hamilton, was a couple of years, probably 2 or 3 years. And then from Hamilton to Moulin Rouge, there was probably 3 years in between those shows, because we'll do a show back to back if it makes sense, but we just find that there's so much risk involved that most of the time we're declining opportunities to get involved with shows.
Take us through the economics of investing in a show, whether it be Hamilton or the one that you mentioned. How does that work? At what point do the producers come in with the money, and what is compare the fundraising and the money raising, say to syndicating an apartment complex to syndicating one of these shows? How exactly does that work?
I started investing in the Broadway thing before I started investing in syndications, as I had mentioned. What kind of blew my mind when I went to the first syndication seminar that I went to, and a syndication attorney got up and explained the 506B and a 506C. I was like, oh, I know 506C. That's what we do for Broadway. So, I mean, it was like, oh, I've already done this before. So that's how they're set up. They're set up like a 506C, so accredited investors. Same thing. There's a private placement memorandum. There's a subscription agreement, a company agreement, like the whole 9 yards. It's just like if you've invested in a 506C syndication for real estate, you'll do Broadway. You'll be like, oh, this is the same. The thing that's different is, which gets into sort of what you're talking about, I think the initial portion of your question, which is sort of the mechanics of the finances behind it. And so with a real estate acquisition, you raise all the capital up front, but you get leverage, right? Usually 99% of the deals. With Broadway, you don't. There's no leverage. So you raise all the capital up front.
Oh, so you're cash all in. There's no loan that you can get from a lender in any way.
I would never lend money 75% of something in a Broadway show. Right. I think most banks are like, no way. So that's the way that works at least for the initial capitalization. And then in real estate, we have a pro forma, right? We're like, we're going to charge $800 a month for rent for this kind of unit. We have 20 of those units, or however many units, and it comes to this much. And that's our revenue. And then here's our expenses. On Broadway, they have a recoupment chart. And so what the recoupment chart, again, has the expenses, with they're doing things, but instead of rent, it's ticket price, right? They have a thing they call ATP, which stands for average ticket price. So, you have a theater secured, hopefully, by the time you're doing this. So you know how many seats are in the theater. And so it's really just a theater times the ATP, the average ticket price. Now, the thing is, the average ticket price can differ. There's dynamic pricing. So if a show is selling really well, maybe the ticket prices go up. But also, if the show isn't selling well, you might sell discounted tickets. So that's kind of like the difference between vacancy and economic vacancy in real estate, right? You might have a show where the audience is full, like 100% occupancy on a real estate deal, but maybe not everyone paid full ticket price, right? So like in a real estate deal, you might have 100% occupancy, but you're 95%, economic occupancy because you gave away concessions, which is sort of what we're doing here. And if you have discounted tickets, or the thing with on the real estate is the rent is kind of like the rent. And unless you just raise rents as a whole, there's no certain ones that are paying extra. But on Broadway, certain seats are worth different value. Sometimes they have those seats in the front center that are premium tickets that maybe sell for a lot more than the other ones. So there's all kinds of dynamic pricing involved. But the way that it's figured out is, okay, if we have an average ticket price of X amount and we have 80%, economic occupancy, then we will recoup our money within a certain amount of time. And that's really kind of like what it's based on, the initial investment. It's like, when are we going to get our initial investment back? And so the way these deals are structured, or like 99% of them are structured, is all of the investors' money comes directly to them. So it's almost like 100% pref. Like, investors get all their money back before there's any sort of split with the producers. Once investors have recouped 100% of their initial investment, it then breaks up usually into a 50-50 split. And that's the way that they're generally set up. The thing about investing in a Broadway show where it can be like exponentially lucrative is if you invest in an originating company. So if a show started in London, then the Broadway version is not the originating company. But a lot of shows will start on Broadway, and you're investing in the originating company. And I'm going to use Hamilton as an example. And let me just start off by saying Hamilton's an anomaly. It's a freak of nature. It's a phenomenal show. It's so great. We really believed in the show, but we had no idea that it would become such a cultural phenomenon, right? But what has happened with that show is we invested in Broadway, and then they opened up a Chicago company. So, and that gets capitalized separately. But because we were invested in Broadway, we had rights of first refusal to invest the same pro rata share of the investment. And so we just took some money, because Broadway at that point was paying distributions, and we just took some of those distributions and put that into the Chicago company. And then they did a tour, and then they did another tour, and then they did another. There's like 3 US tours. There's a UK, it's in London. We went and saw it in London. It's about to open up in Australia. So we've got, I think it's either 6 or 7 productions of Hamilton. Now we never really outlaid any additional cash, because any outlays to invest in these other things we did off of the distributions that were already coming in. And so, when the Broadway show was successful, that was great. And there was some good money coming in. But then when you multiply that by like 6 or 7, it can become a very large number. Subsequently, Moulin Rouge, which we're co-producers on, was on Broadway. Broadway's paused right now at the time we're recording this. We are in the middle of the COVID crisis. And it will come back. It's in a good financial position to do so. But there will also be additional companies of Moulin Rouge that are already slated and have already been capitalized. It's going to be opening up in Australia, in the UK, and a US tour. And Broadway will be coming back. So you're going to have 4 companies probably by 2022. And probably at some point in 2022 before all 4 of those companies are up and running. But there'll be 4 companies of that show because it's been very successful. So that's the cool thing. And then you can also invest in a Broadway show, and it can open up and get terrible reviews, and nobody buys tickets, and it closes the next day, and you lose all your money. So, to be clear, most Broadway shows are not profitable, but the ones that are profitable, I mean, Hamilton has blown away any sort of return I think I'll ever get on any real estate investment for the rest of my life, because it just happened to be that one in a bazillion kind of hit. You have shows like that on Broadway, Wicked, Phantom of the Opera. Those are all running on Broadway still. I mean, Phantom's been running forever. And then you have ones that are no longer running, but ran forever, like Cats and Les Miserables. And, there are sometimes these hits, but there's also a lot of flops.
So I want to dial in on Hamilton here, because that's, that I love that production. And I've seen a touring company here in Grand Rapids. And of course, I watch it all the time on Disney Plus. My daughter knows every single lyric to every single song. That seems like one that's going to be around for a long time, much like Phantom of the Opera or Miss Saigon. Does that mean as an investor, you're just going to keep raking in the returns on that play? I mean, is that just a forever cash flow for you now?
Let me tell you the way that, and again, I say 99% because deals can be, could be different, right? But the way that it works is we talked about that originating company, right? And then we talked about how that originating company, it gives you rights of first refusal to invest in subsequent companies of a certain class, right? What it also does is you share in a portion of the royalty pool. A portion of the author's share of the royalties gets paid to that originating company. So, as an example, if we had decided not to invest in any of the subsequent productions of Hamilton that we've invested in, we would still be making a portion of money from those because they pay some royalties into the originating production. So that means the originating production has more distributions. The way that these are set up is that the originating production, that just keeps going and going and going forever until the originating production stops on Broadway. Once it stops on Broadway, then there's a certain period of time. So it might be 25 years, but it's 25 years from when it stops running on Broadway. So the clock has not started ticking yet. That's number one. Number two, that author's share gets paid not only by the large professional productions, but every production. So even if a high school does a production of Grease nowadays, or whatever show they do, they buy a license from a company. And that's the company that they use. They get the scripts and the music and all that stuff, and included in that is a royalty. And, it's not like a large ticket item, but they do pay for it, and a small portion of that would go to the author, and an even smaller portion of that would go to the originating company. So shows, even after they've closed on Broadway, if it's a successful show that's being done in regional theaters, either professional tours or regional theaters or even high school productions, that money comes in. So our belief is that we will die before the money stops coming from the Hamilton productions, and we will pass that on to our kids. Now, I don't think it's going to be crazy amounts of money, but I do think every high school in America is going to do Hamilton for a very, very long time because of the educational content in it. And it is such a prolific show. I just remember like Grease, like everybody did Grease. I think they probably still do Grease. Like Grease was like the show for a gazillion years, since I was like 5 years old till I was 30. Like everybody always did Grease, or South Pacific was another big one that just everybody always did. And so I think Hamilton may become, or Annie, right? Annie was a big one. So maybe, Hamilton will become maybe one of those. I would agree that that's probably going to be the case. Can you talk about your personal relationship with Hamilton and how you and your wife got involved? How closely were you involved in that? At what point did you come in? Are you limited partners, general partners? Just describe that a little bit for us, please. Yeah, so we're limited partners, if you will. We're just investors in Hamilton. My wife, is very tight-knit with the Broadway community. I, had that background, but not as much on the business side as my wife. But after, being with my wife for such a long time, I've gotten to know these people. And we're very close personal friends with a lot of people who have, are like big producers on Broadway now, and they weren't, right? Like my wife interned with a friend of hers at a place, and he's a very prolific Broadway producer now, and he was a nobody and she was a nobody, and they came up through the business together, right? And a very good friend of hers, we were at that person's we were at their wedding, is one of the lead producers on Hamilton. So when Hamilton was being done downtown at the Public Theater before it went to Broadway, we were invited by her to go see the show. And we saw the show and we were like, wow, this is amazing. Like, we love the show. And Erica said, do you need help with get your capital raise? And we would be interested in investing in it. And we were told, well, actually it's all full. Like this person and, the people who are involved in Hamilton have been around for a very long time, and they've done many, many shows, and they have like a stable of investors, just like I do on my deals. Right. And so by this point, it was already full, and I hadn't moved to Broadway yet, but it was already earmarked, taken, whatever. And we were kind of bummed because we just thought it was such a great show and would have been cool to put money in it. Who knows? You never know how these things are going to go. You don't know. We thought it was going to be a hit, but we could have been wrong. You never know. So a few weeks before before it opened on Broadway, I guess when the final capitalization was coming due, maybe it was a couple months before, but my wife calls me one day and she's like, do we have blah, blah, blah amount of money in our savings account? And I was like, it was kind of something, it's not a huge amount, but it was just kind of more than you got $20 kind of conversation. And I was like, what are you talking about? And she's like, listen to the number. She said the number again. And I was like, is this for Hamilton? I knew, because it was an increment of the way that the Broadway shows are raised. And she's like, yeah. So I said, is this for Hamilton? And she said, yeah, the person that we know has a half of a share available. I don't know what happened. Someone didn't come through at the last minute. I don't know what the issue was, but we jumped at the chance to put in a teeny little bit of money into Hamilton, which has now grown quite a bit. So that was awesome. We were so excited. And then along with investing in the show, you get a lot of times you get to go to the opening night on Broadway, which is kind of cool. So it was, to be part of that show is a special treat. It's really an honor to be involved in the show. I love the fact that the cast is totally, it's all multiracial, right? Colorblind casting, which I love. And I love the message. It's interesting, Brian, I'm writing a book. We're actually editing it right now. And that musical is actually a big part of my decision to go into real estate full time. And I write about it in the book.
Well,
so
why? How is that?
Chapter of the book.
Yeah, why is that a big part of your decision?
So we invested in the show, and I loved the show. I'm listening to the CD all the time. It was on heavy rotation in our home, in our car. And we moved to Miami, and when we first moved to Miami, I was looking for advertising jobs, like I had done in New York, interviewing. I didn't really want to do it. I was burned out, but that's what I do. That's my job. And I was looking, and I also was listening. I don't know why it took me so long to finally listen to it, but I was listening to Robert Kiyosaki's Rich Dad, Poor Dad, and him talking about multiple passive income streams. And I had this passive income stream from Hamilton, and from the townhome that we owned in Brooklyn was throwing off nice cash flow. And I had an investment property in Connecticut, a vacation home that wasn't quite cash flow positive, but was kind of close. And I was like, wow, maybe I should be building this passive income. And I've been doing well with real estate on the side, and I really like real estate. And maybe that's what I should be doing. But no, I'm going to go work my job. But maybe I should do this, And I'm listening to Kiyosaki, passive income. And I'm also, when I'm not listening to Kiyosaki, I'm listening to Hamilton, and there's that song, your shot. Don't throw away your shot. I'm not throwing away my shot. I'm not throwing away my shot. And I'm listening to this and I'm listening to this. And I'm like, wait a minute, what am I doing? Like, this is my shot. Like, this is my chance. Like, this is my chance to not go back to this job that I don't like doing. I mean, I had enjoyed it, but I was just burned out from it. My passion lies in real estate, and that's what I should be doing. And just hearing that, like, take your shot, take your shot, take your shot, you know, and I was just like, I'm gonna do this. And I spoke to my wife about it. I was like, hey, this is kind of crazy. This is what I'm thinking. And she was on board, and I haven't looked back since. But I don't know, if it hadn't been for the cast of Hamilton telling me to take a shot in my ear ad nauseum, I may not have done it. And so I do think that Hamilton was a big part of me making the leap.
It was the perfect blend of Hamilton and Robert Kiyosaki at the same time.
Exactly.
That caused you to say, I'm not getting a job.
An interesting mashup, right? I don't know if any other person has ever talked about Kiyosaki and Lin-Manuel Miranda in the same conversation. But for me, it was huge. It was huge. And they're two big influences on me. Yeah.
I can see how that both are hugely influential, you know, in our society. So that's awesome. Yeah. I'm really interested in the economics of the Broadway play, and you don't have to be specific about Hamilton or any play, but you know, since it's all cash, you know, there's no leverage. Yeah. What's a typical play that you would invest in? How much are they raising up front when you come in? Are there A shares, B shares? You know, how is the money spent, and what are some of the expense items?
The first thing is we mainly focus on musicals. You know, a play, the capitalization on a play is going to be much smaller. I mean, maybe it's around $5 million. I don't really know because I haven't been involved in one lately. Musicals tend to be larger. We're involved in Moulin Rouge, which may be one of the largest capitalizations on Broadway. There was an article in the New York Times about it recently where I think it was disclosed that it was like $28 million capitalization. So, you know, figure $5 to $30 million, let's say, is a pretty safe range. I think most musicals are going to capitalize at least, I would think, $10 million. And they use that money to build the set, to build the costumes. I mean, Moulin Rouge, if you haven't seen anything, Google it, because the sets are lavish. The costumes are amazing. There's a huge cast. It was just a very expensive show to put together. Plus, if you remember the movie Moulin Rouge, the musical is very similar. So it's all music by pop artists, right? You've got the movie was, I think, 17 years ago. So it had like Elton John and Madonna on it, and they still kept Elton John in there. But now there's like Beyonce in the newer version. So you have royalties, you know, for Beyonce and Katy Perry and all of those different things. So there was, I think, a huge advance that needed to be like held in escrow for royalty purposes and things of that nature. So the capitalizations for a musical are going to be between $10 to $30 million.
So are they raising the full $25 million all at once, or do they stagger?
Yeah, it's all raised at once in one shot at the beginning, because you have to build the set and you have to build the costumes and you have to have, you know, the capitalization is enough to get you to, you know, your first performance, and then maybe, you know, a month or two in, right? And that's why if a show's not selling well after opening night, it usually will have to close relatively quickly. But it's just enough money to kind of get you up and going and started, but it's not for, you know, you're not raising operating, you know, expenses for the next year or something like that. So all that stuff is needed up front.
What about theaters? Are you like, so for Moulin Rouge, are you renting the theater, leasing the theater? How exactly does that work?
So you rent the theater from a theater owner. There's usually a minimum rent that is paid, and then the theater owner also will get a percentage of the box office sales.
What does that tend to be? Is it like a 10%, 15%?
It depends. It really depends on the negotiation that you make. I mean, the company that my wife works for, they own some theaters on Broadway. And so, you know, I'm sure that if they have a show that they're producing, they probably have a more favorable deal for that than if they're renting it to somebody. I don't know that that's a fact, actually, but I believe that it is. It all depends on the negotiations of how it's all set up.
And you and your wife, you're Tony winning.
No. Nope, not winning. At least not yet.
Tony nominated producer.
Yeah.
So what nominated for what? Like how, talk about that a little bit.
Yeah. And I do want to touch on one other thing real quick, and then we'll get on that, which is just in terms, because you had asked about, how do these shows tend to perform and recoup and sort of the schedule on that. So most shows don't make money, which is why we don't invest in most shows. But a successful show on Broadway will usually recoup their money in somewhere between 1 to 3 years of running. And then a show that does reasonably well, you could probably double your money in about 5 years, like a real estate syndication. But then if you have a show that does really well and spins off with tours and multiple productions and other stuff, then it can do much, much better. Now, getting into the question about the Tony stuff, my wife was nominated for a Tony Award for, so as a producer on a show, you're nominated if the show itself is nominated for best musical or best play. So my wife was nominated for best play for that first show that she got involved in on Broadway. So she has a Tony nomination for that. And Eric and I, as co-producers, have been nominated for Moulin Rouge, which has been nominated for 14 Tony Awards. And the awards haven't happened yet. So there's a chance that we could win or we could not. So we'll see what happens.
So Moulin Rouge had opened then before the pandemic shut it down?
Yes.
Right.
Yeah. Moulin Rouge opened in the summer of 2019. It was doing really well. That year, at the end of 2019, we had the top 3 Broadway shows, because we were invested in Hamilton, which was number 1. Moulin Rouge was generally number 2. And we were also investors in David Byrne's American Utopia, which was a limited engagement. And that was running on Broadway as well. And that was selling extremely well. So, in the fall, winter time of 2019, we had shows that were doing really great. David Byrne's show had already closed well before the pandemic, but then the pandemic shut everything down.
You mentioned your co-producers on Moulin Rouge. So does that mean you took a bigger stake in raising the money for it, or what does the co-producer title mean?
Yeah, it's so there's usually like a lead producer, and then underneath that there are co-producers who don't have as you're still part of the general partnership. You're still involved in many different aspects of the show. But you're not like the lead producer. I mean, the lead producer have been working on the show, sometimes for like 10 years. You know what I mean? Like, I'll give you an example of Hamilton. Lin-Manuel was working on it, I think it was 10 years before. Like, he had done In the Heights, which had done really well, but he was working on the show. And, as you're working on a show, there's a lot of time and a lot of money that needs to get spent. So you've got a producer, somebody who's gonna like be behind that show, and they haven't even really capitalized the show. They didn't raise the money for the Broadway production. It's like a startup capital, like seed money, right? They'll usually get this thing called like torchbearer points in the subsequent production on Broadway if it ends up going to Broadway. A lot of times these things they don't even make it to Broadway. So that's like a lead producer will be doing that and putting money and time and effort to get the whole thing going to a point where then it is ready to bring in other people. We're have a unique position, especially with Moulin Rouge, where my wife, she runs the Colonial Theater here in Boston, and that is where Moulin Rouge was prior to going to Broadway. So she was, involved in some aspects of the show while it was still here. She's not the general manager of the or company manager or anything of the show, but she was involved, and she's very good friends with the general manager, and they would collaborate on different things, and she could help and give input and things from sort of the business aspects and just having kind of a unique position of being the general manager of a theater here.
So as co-producers on Moulin Rouge, did you help raise the money as well, or is it more your
Sure.
wife because it seems like she was involved with the Boston production?
I think it's a bit of both, right? I mean, it's just like when you're talking about a real estate syndication, like nobody is just solely raising capital, right? There are duties and roles and things that you have that are involved in the show. And my involvement was, along with my wife. It wasn't just me on my own. And so, from that perspective, we're sort of co-producers because we were doing it co-lead, number one, but I think the official title on it is also as a co-producer, because we weren't the lead producers who shepherded this thing from the very beginning.
And how is Broadway doing? I mean, are you guys going to bounce back after this pandemic?
Well, I certainly hope so. There was an article in the New York Times 2 Sundays ago. The cover of it was a whole big thing on Moulin Rouge, and then there was I think 2 or 3 pages inside, and it's actually online. You should check it out. Talking about the pandemic and how it's affected the cast of the crew of the show. 25 cast members got sick with COVID, this was at the very beginning of the pandemic when nobody knew. One person in the cast gets it, and they're on stage singing with everybody else. I mean, it traveled like wildfire, and it's been devastating to them and their careers, and the same thing with people anybody involved in theater. Now, from a investor standpoint, it's not bad, right? Because the show paused. The show was doing very, very well, and we were very prudent with our money. So we had money in the bank. It's not like we had distributed it all. So we also had business continuity insurance, which we were able to make a claim on and get that. So we were able to cover this cost, because there were a lot of costs in both shutting down, because we paid cast and crew and stuff for a certain amount of time after the show stopped performing and stopped generating revenue. We had to return tickets, refund tickets, and there will be startup costs going back in, but the show was doing really well. We had the money to start it back up, so there's no reason why we wouldn't. Now, there are some other shows that weren't doing well, that were already in a precarious position, and unfortunately have closed down or aren't going to be able to reopen. Maybe they could have, from inertia, just kind of stayed going from the momentum that they had and stayed open another 6 months or a year. Who knows? But because of the shutdown costs and the cost to restart it up, it's not going to be possible for them. So some shows are just not reopening. So it's not all, it's not great. Like I said, from an investment standpoint, if you're invested in a successful show, like Hamilton will open back up on Broadway, I think it'll do fine. We have to see where ticket sales are. We have to see what attendance is like. But theaters will be one of the last things to open from the pandemic. So I think that because you have a lot of people in a really confined space. So I think by the time they're allowed to open, people will actually hopefully feel comfortable being able to go to them. And hopefully people will buy tickets and go to theater. Hopefully tourism won't suffer too much. And a lot of Broadway dollars are tourists to New York. So I think the people of New York and the tri-state area will support Broadway coming back in a big way. There's so many people who love the theater and realize that these people will have been out of work for such a long time. So that, I think, will happen in a big way. And then I think also what will happen is, hopefully tourism will start to do better and increase. And so hopefully things will go good from there.
As we wrap it up here, tell us a little bit about your book and how people might be able to get a hold of you. Yeah,
I think the best thing to do is to go to my website, mjpinv.com. I know you said MJP Property Group earlier, but I'm actually rebranding to MJP Investments. So that's why you've got the INV, mjpinv.com. And you can find out, you'll be able to sign up for my newsletter and find out about my book, which will be coming out in mid 2021. And the book is all about my journey as an investor, starting off from like when I first moved to New York and sort of my whole life, my whole narrative to where I am today, how I got interested in investing, the types of investing I did. So through telling this very hopefully entertaining and energetic and comedic narrative, because I tried to make it interesting and funny, I pull out certain key concepts that I learned along the way that will help an investor, I hope, regardless of where they are. I mean, we get into some really advanced topics towards the end of the book, but chapter 1, you can be a complete novice and learn. So hopefully it kind of has a wide spectrum, but it's really geared more towards people who are looking to invest passively. It doesn't like teach you like, this is how to become a syndicator. That's not what this is about, but this is about how to look at investments and specifically real estate, and how I did it and the things that I learned and that people can apply to their situation.
Great. Well, I'll look forward to reading your book. I'm sure it'll be a lot of fun and
Thanks,
educational. And I want to thank you for just telling us about your experiences investing in and syndicating apartment deals, and especially just investing in and syndications of Broadway productions like Hamilton and Moulin Rouge. It's been really fascinating talking with you, Matt. Thank you so much for having this conversation.
Well, thanks, Brian. It's been a real pleasure. Thanks for having me on your show.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com.
And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.